Man made it, governments made it, central bankers made it, and they designed it so that they could control its purchasing power value. But they create these illusions, right? Oh, the US dollar against the Japanese yen. Blah. I mean, that only kind of matters when you're traveling. But it's a distraction because what do you hear? You hear the strong dollar, or the strong yen, or the strong this, or the strong that. In the meantime, everything that you go to buy with this garbage costs more and more and more to do it. Why? Because this is worth the same thing.
You're watching CapitalCosm. My name is Danny. It is February 18th, 2026, and my guest today is the one and only Lynette Zang. Lynette, thank you so much for coming on.
I'm happy to be here, Danny. Thank you so much for having me on. I'm very honored.
Oh, well, thank you so much for coming on. And guys, be sure to hit that like and subscribe if you haven't already. It really does help boost this video in the algorithm. So if you're enjoying this channel, you're enjoying these videos, hit that little like button. It's like a little superpower that you have. It takes less than a second, and you pretty much launch us into the stratosphere as a result. So I greatly appreciate it. And there's also a hype button too. Some of you guys may or may not have it. Be sure to check that out too. Lynette, let's go ahead and kick it off. It is turbulent times in the precious metal space. What do you make of all of this price action? It looks like we're taking, one step forward, two steps back, at least with silver. Gold, to a lesser extent, we've been kind of hovering around 5,000 for a few weeks now. What do you make of this turbulent volatility?
Well, honest to goodness, I mean, most people trust the spot gold and the spot silver market contracts. So in the contract area, and remember, price contracts out of the U.S. has been what's been dictating price discovery on a global basis. But frankly, that started breaking down more than a year ago. It was a year ago, last January. And so when I'm looking at the price action here and the premiums in the East and all, putting everything together, really what we're dealing with, it's like a bridge that sways in the storm and there's a crack in it, and the crack are those contracts. And people are losing confidence in promises, which personally I'm very happy about, because they should be losing confidence in these promises and they want the real thing. And that's what I see. And all the whipsawing in here, it's just for show, as traders are being forced out of their short positions or pushing, or the markets themselves in the tech, people are uncomfortable with all the spending in AI. There's a structural shift that's happening there with those mega firms. So as those stocks go down, well, and they get margin calls because it's all bought on debt. So I could say that what I believe is happening is that the huge level of intangible promises and debts, that whole system is breaking down.
So by the time this video comes out, it'll probably come out towards the end of the week. We're looking at we're right in the middle of a Chinese New Year, the holiday week off right now, and lots of people have been attributing this volatility to China taking time off, Shanghai being closed. Is that how you see it as well? Is Shanghai really that impactful? I mean, it obviously is, but is that what's going on here?
Well, I mean, that's just one of it. I mean, they're contracts. The physical markets, frankly, they cannot move as fast as a button push contract. So, while yes, there's a holiday, and so maybe buying, but it's not really been the buying of the physical that has been the very big push over all these years. Remember, we're talking about a short-term piece in here, whereas I go back to the long-term steady piece. The other part that is likely unfolding here, along with those other things, is the fact that those contracts, spot silver and gold contracts, were severely overbought, not overvalued. That's a big, huge difference. And I want to talk about that. Because if you look at the contracts on spot gold, now I didn't do it today, so I could be off a little bit, but it was roughly 39% above that 200-day moving average. Well, 10% is considered a lot. So if you were to go back, for example, and look at a long-term chart on gold, what you would see is you would see this run up and then a consolidation, giving that technical 200-day moving average an opportunity to catch up. If you go longer than that, it's going to be easier. And you see that wedge that was just created too. But yeah, I mean, you can see, I see it twice in that chart that you have up there. Yep, exactly. That's one of those places. So you see they can stay inside of a range. And I think that's also technically part of it, because nothing goes straight up. Nothing goes straight down. Silver is the fuse. It's more volatile. Silver questions confidence, right? So when silver sees confidence lagging, like we've been talking about, then, that's even more volatile. And I think that, don't hold me to this because I haven't run those numbers today, but I think silver is still like maybe 70 or 60% above its 200-day moving average. These are extremes, right? And the 200-day moving average, you can think of it like a rudder on the back of a boat. And if the price of anything, doesn't matter, spot gold, any contract, if the price is a water skier, there's only so far above or below that 200-day moving average that it can go before it starts to be pulled back toward that 200-day moving average. So these drops, they don't bother me at all as a technician, because it's really what should happen. And, you showed a wedge formation. Yeah, there. That wedge formation, well, if it breaks above it, then we're more than likely, to see the price action go up on these contracts. But the physical world doesn't really work that fast. And, with 33 users of physical gold and 36 users of physical silver all around the globe, these manufacturers it depends because it's used in so many different areas. But, if they need the materials, they need the materials. That is actually why the physical markets are above all governments and central banks, because they cannot overwhelm the physical demand of it. But hey, in contract form, they could create as much gold and silver as they want. So I view this as an opportunity.
Because I don't know if you see the same thing as I do here, Lynette, but it looks like you got a pretty steep bull flag that's formed here, and it looks like we broke out of it. Do you see the same thing?
Yeah, I do see the breakout. Yep, absolutely, 100%. Yep. So we were talking about it when I couldn't see, it was too small, but there's the breakout. So what does that mean? That means the price is most likely to go up of the contract.
Yeah. Right.
I personally don't buy contracts. I like the physical. I like it in my hand because it's much truer, and that's really what's happening in here. And I don't know when the transition for the physical true supply and demand to really fully express itself, but we're a year into this shift already, and I this is something I've been waiting for. Well, I started in the gold area 2002. So this is something I've been waiting for a very long time.
Well, it seems like you're being vindicated here, and because in theory, the paper price, the contract price, is supposed to be a representation of the physical price. If the two become so disconnected to where it is no longer a proper representation of the physical price, the paper price, does it not become meaningless at that point?
Yes, but it also becomes, as this transition takes place, that's where you have a lot of this volatility coming in. And there are a lot of factors that feed into it, but yeah, that's the point. And remember, we are in a reset economy right now. Even though most people are oblivious to it, that doesn't really matter. And you're absolutely right. We've been taught over decades that what you see on Wall Street is a representation of Main Street. But that started really shifting really in the early 80s. And it's just gotten progressively worse as the whole system was financialized. In other words, everything was turned into a financial trading product. And it doesn't matter what you're looking at, you know, whether it's water or energy or food or gold or silver or paper or lumber, or take your pick. Take your pick. It does not matter. We are not and nor have we been for quite some time, as more and more of these tangible hard assets in the real world that we live in have been gobbled up and converted merely into contracts for Wall Street to trade. And look at the profits. Did you see the results of, I think is it Bank of America or Wells Fargo, that the CEO is getting something like $40 million, and that their payouts and their bonuses are higher than they were in, what year was that? Oh, 2006, because of all of the very aggressive trading. And that's how banks make their money. So it was garbage going back to 2008 when it was a derivative bet, so a trading product on mortgages, subprime mortgages, that imploded, right? And I mean, that was look, it was happening way before that. I talked about it in July, et cetera, but the public didn't see anything until September of 2008, even though all the signals and signs and things were there and things were happening. It wasn't like nothing was happening. We had those two Bear Stearns funds that were great, great, great. And then boom, 24 hours gone. And if you were sitting there waiting to sign on a mortgage, and if it happened that morning, guess what? It didn't happen. So the derivative problem has gotten significantly better. What is a derivative? A leveraged bet. They don't ever own the underlying. It is not about owning the stock or the bond or the gold or the silver or anything else of the underlying. It is simply a bet on the price action of that vehicle. That's it. And where central banks weren't really into it that much prior to 2008, well, after that, they jumped in a very big way. And the average leverage, it's hard to even know what that is because this is such an opaque market. But I just did a piece on it and did the calculation based upon in the US, the Office of the Comptroller of the Currency, the OCC, produces a report on a quarterly basis of derivatives in the FDIC insured banks. And so using their netting benefit, which is just a little accounting trick to make things look smaller, they, I can guesstimate they had an 88.4% netting benefit. So they admitted to 225 trillion in notional contract values. But if they netted out and reduced that by 88.4%, what that means is that the notional value of those contracts was more like 6.9 quadrillion. When I had counted it back in 2009, it was 1.4 quadrillion. And if you think you're seeing the truth, you're not seeing all of it. We're seeing this much of it, right? And we know that those derivative bets, when they explode or implode, take your pick, like they did in 2008, it's so overwhelming. There's no way to even print. How do you print your way out of 6.9 quadrillion? And that's just the value of the contracts. That has nothing to do with the underlying value that's at risk. Everybody, the IMF, the BIS, the FDIC, the Federal Reserve, et cetera, on and on and on and on and on. Every single entity says we really have no idea what the true value is of risk. So they just keep making these bets more and more complicated, more and more complex, and yet most of them are bilateral, mean between two entities. Well, what does that mean? That means that if the counterparty on that contract goes south, there's nobody else in there to pick up that slack, right? So we go back to, where are cryptocurrencies used? Where are dollars used? One place, the financial system. So when demand goes away, you have nothing to support it. But physical, not paper, physical gold and silver, 33 different global users, 36 different global users. One. You take your pick. What do you want to go into this fight with? Because that's really what's happening when we're talking about that affordability has become an issue. Yep, it has. It has. And the youth, and those are the ones that do the revolution, the youth graduating from college, what are their job prospects? What are, if they even studied and went in and said, oh, technology, that's going to be the place for me. That's the place to get a degree. Well, AI is kind of killing a lot of those jobs. And so we're seeing this rise in youth unemployment and dissatisfaction and disillusion with the American dream, with the Chinese dream. Go wherever you want in the world. It doesn't matter. We are all one planet. We are all one big community. But you have so much that's going on. And all of it is indicative of the end of a currency's life cycle. That's why none of this is surprising to me, because it's a pattern that's repeated over 4,800 times. But
we just do it over and over again.
Yeah, exactly. Rinse, repeat, and wash. But we have an opportunity to make it different. We have an opportunity to level the playing field. And we do that by demanding redeemable gold back in the monetary system again. Because please tell me, if you know of any, what tools do you and I or the general public really have to hold our politicians to task, to hold our central bankers to task? What?
We don't. We have elections, so-called, and I use the phrase "so-called" very strongly here, but we have really nothing at our disposal.
Exactly. So are we going to just continue to accept that garbage? Because there was a day when we had that. And that was when you could walk into any bank with this and pull out an ounce of gold. Because what that meant was then governments couldn't grow as much debt. It created restrictions around what they could do, and it forced fiscal responsibility. It was a way for you to vote with your wallet. And guess what? It still is. It's a way for you to vote. If you like what's going on and you want to go into a full surveillance economy, don't do anything. Just be blinded by the garbage numbers that they put up there, because they keep inflating those intangible assets that are based on dollars. But, even this one, oh, here we go. But, my favorite, my $10 trillion Zimbabwe note. Mm-hmm. It can buy me nothing. So don't be blinded by numbers. And that goes back to the original conversation with the spot markets and all the volatility. None of them even marginally reflect the true fundamental value. And if you don't know how much something is worth, and I don't care if it's a stock or a bond or a house or gold or silver or a puppy or whatever, it doesn't matter. If you are trying to quote unquote invest, if you don't know how much something is truly worth, then all you're doing is gambling, isn't it? Because
by definition, yeah.
It is. And ultimately, I can make a guarantee on this. At some point, all assets and all instruments go to their fundamental value. What's the fundamental value of this? Well, the Federal Reserve tells us. He chose it's a big fact. Goose egg, just like the true value of this. Why? Because man made it, governments made it, central bankers made it, and they designed it so that they could control its purchasing power value. But they create these illusions, right? Oh, the US dollar against the Japanese yen. Blah. I mean, that only kind of matters when you're traveling. But it's a distraction because what do you hear? You hear the strong dollar, or the strong yen, or the strong this, or the strong that. In the meantime, everything that you go to buy with this garbage costs more and more and more to do it. Why? Because this is worth the same thing. Am I wearing? Okay. I've had this ring for probably, I don't know, 30 years. And at the time that I bought it, I think I paid maybe $100 for it, something like that. It was not an expensive ring. But the gold in it alone, forget the cameo, the gold in it alone, even at the manipulated spot price of it, is right now probably about $2,500. And I have a lot of jewelry that I've had forever. And so I know what I paid for it. What's changed? This is the same ring that I've been wearing for 30 years. What's changed is the value of this crap. And the sooner people understand that, the sooner they start, and they take it to heart, right? It was a quest of mine, it still is, for many years, to translate financial noise into understandable language so that you, the individual, regardless of what anybody says, including me, that you can put your best interest first because you're able to make educated choices, right? But all of this stuff is about blinding you so that you don't realize the choices that you're making are totally not in your best interest. It's wealth transfer. Why is that okay with you? We have an opportunity to do something different. The fundamental value of this is zero. So if whatever it is that you own can only be converted into this, what's the fundamental value of that?
Zero, nil.
Exactly my point. So they can make it look like 10 trillion, but it means nothing. How is this used? One place, man-made. How is this used? 33 places, not man-made. 36 places, not man-made. This is the only money, the only form of money that's not man-made. So if man makes it and they write the rules, whose benefit is that going to be in? Why not take our power back?
Now, Lynette, it's
All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Just click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
seems like we're heading into a transitionary period where
Yeah.
you're seeing all these governments start to stockpile gold
Yeah.
because they are anticipating whether it be a BRIC settlement currency, whether it be their own currencies. It seems like there will be a gold component to whatever's coming down the pike.
Yes.
Maybe even here in the United States as well. But the caveat is it's going to be under a CBDC interface, a central bank digital currency interface. So we could be seeing them allow us to do away, sweep away the fiat currencies, but only as a means of replacing them with something possibly more nefarious, and that is a CBDC. Will gold, I mean, it seems like they do want to have some sort of gold component to the CBDC. How is that going to work out in your view?
Well, in my view, whether it's a CBDC or it's a stable coin or it's still a digital dollar in this country, the reality is that central banks and governments are not going to give up their money monopoly easily. And they would never voluntarily, excuse me, they would never voluntarily have it redeemable. Sorry. They would never voluntarily make it redeemable. It's the public that would have to demand it. And as long as that were in it, and that means if I don't like what I see you doing, I can say, send me the gold. You can keep the rest of the crap that's in there. It doesn't have to be 100%. It can be 40%. But you see, Zimbabwe tried that to regain. I mean, it happens 100% of the time. So when you say that there'll be a gold component in the currency, 100% there will be, but not right away, not right away at all. But that's how they're going to try and regain public confidence. It's what they do every time. But Zimbabwe did that in their 6th iteration of money. Public still doesn't trust it because it's not in any kind of physical form, and you can't redeem it. You can't say, give me my gold. I don't like what you're doing. So we have to demand that, and we can do that if we get 3% of the global population to convert their garbage fiat money which is the government debt-based money, into sound money, gold, silver in their possession. And if enough of us do it, we can demand it, as long as we take those steps to be completely independent, which is you want to create surety, not just in gold and silver, but food, water, energy, security, barterability, wealth preservation, community, and shelter. We have to come together in community. There's been a massive push really since the 60s to distance people and separate them. And what happened during COVID really pushed us further and further away. And you look at having a conversation with somebody that maybe you don't agree exactly. And now I hate your guts and you're wrong and you're right and you're not talking. Because what I've learned in my long life is that even if something comes from my very worst enemy, somewhere in there, even if they are really trying to hurt me, somewhere in there is some little grain of truth. And if we aren't talking, we can't find that truth. So I've realized that the most important part of my job is to bring together community. That's what I've come to understand and realize over all this time. That's the most important thing that I can do. Because if people are independent, if they have surety and security in their food, water, energy, all those mantra pieces, and the government says jump, you can go, nope, not gonna. If you don't, if everything is inside of the system and you're completely dependent upon that system to feed you and everything else, then you're going to have to say how high. But if enough of us, and it doesn't mean everybody, if enough of us, like my neighbors come here, and I have an urban farm in the middle of Phoenix, my neighbors come by and they'll take herbs or they'll take a vegetable or they'll take a piece of fruit. It's one of the ways that I create community in my neighborhood, right? They know that if they can't find food at the grocery store, they can come here. So, that's kind of powerful, right? There's power in numbers. We can have that conversation. I don't have this conversation with my neighbors. They just know that they can come here if they need something, or if they find a stray duck or chicken, or bees or fish, then I usually get a call on that one too, but that's the point. There is strength in numbers. And so my highest goal is to bring the world together to have this conversation. And you don't have to all agree. Let's hear each other out. Let's keep our minds open. Let's seek the truth that's on both sides. And let's be stronger and more powerful together.
So it seems like there is some sort of great awakening happening. I'm not talking about like the QAnon stuff, but like the actual people are becoming more awake as to the reality of fiat currency, the reality of the elite class. I'll just leave it at that. But there's still some stragglers out there who are still stuck in normie land. Still,
well,
it's kind of hard to get to. How do you get to those kind of people?
You didn't. I don't know that you got your. Did you get your dime card, Danny?
My what card?
Okay, this is how we're doing it.
Okay.
Traveling, and also make sure that we have your address so we can make sure and send you some of them. But this is our dime card, because I realized one day that I was working out. I lift weights and I was working out, and my trainer is an attorney turned gym rat. So we have lots of, and I've been going in for many years. So we've had lots and lots of great conversations around the years. And then one day we were talking and I said, well, prior to 1965, our money, our coins were actually silver. And it was something like that. I don't remember it exactly. And he goes, they were? And he's about in his mid 40s, which is about the same age as my children. And I said, I was shocked that he didn't know that, because his undergraduate degree was in history, right? So we've had lots of historical conversations. And then I realized that anybody that was born after 1965, there were some stragglers because they didn't pull the silver out of the system, but that there are many generations that have been born that have never held sound money in their hands. So we came up with this, and any client gets the first one for free. You will also get it. But on this side is a pre-1965 dime, which and pre-65 coins are 90% silver. And then this is the new dime right on the other side. So they look the same, they fit in the same machines, blah, 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 blah. People didn't think anything had changed. But if you want to see the change, you look on the rim. And on this coin, it's just silver. That's all you see. On this coin, you can see a little bit of copper color, because copper is too expensive to use in coinage. And that's what happens in the current system. As money becomes more expensive than the face value, like gold and all the new Federal Reserve notes that they printed from this, the problem was that they printed so much of this that they couldn't afford to do this one coin with a $20 face value anymore. Couldn't afford it. Plus, if you didn't like what they were doing, you could go in and pull it out of the system. They don't like that either, because the public had control. So very sneakily and quietly, they took this away from us, but we still had the silver. Well, then the silver got more expensive. It cost more than 10 cents to create this. So then they had to get rid of the silver, right? Which they did, and replaced it with garbage. And they did the same thing for those that are asking, because they will be. Copper. Prior to 1982, those are 90 pennies are 95% copper. So I encourage everybody to go to the banks and get some penny rolls and go through those pennies. And if it was minted prior to 1982, keep them, because they're copper. But again, even that base metal that has no good metal in it, well, we just canceled printing the penny or creating the penny because it cost 3.9 cents. Why? Why did it cost more to create this money? Because they're devaluing the currency. And when you hear Wall Street touting how awesome the devaluation trade is it no wonder that we're getting an awakening? Because people have to go to the grocery store and take out a loan for 4 easy payments to feed their family for a week. I mean, duh. I mean, seriously, you can only push down so far. There is only so much that you can do before people start to question it. That's why that 2% inflation target is the perfect number, because they are inflating away the value of this. You're working for less and less and less, even though you don't realize it, because it has the same nominal value like we were talking about with derivatives. But what you can buy with this, I mean, my God, when I first got divorced and I had my 2 babies that I had to feed, I had $20. So this would have been 1984. Yeah, 1983, 1984. I had $20 to go to the grocery store with. And I needed to make that $20 last me as long as I possibly could, because I had 2 babies to feed. What does $20? And I could do it. I could get by for about a week and a half to 2 weeks on $20 at the grocery store. And I don't buy garbage. What can you buy with $100? What does that buy you at the grocery store today? Like almost nothing. Probably less than that $20 bill bought me back in the 80s. Then I became a stockbroker and they gave me a salary. And I will never, ever, ever will I forget this, because I had been going through, divorce and all of that. It was a very hard time. And then I went to work at Shearson. And as I was training to take my Series 7, they actually paid me a salary, which was like flipping amazing. And the first paycheck was the day before Thanksgiving. And I had friends that were coming up to have Thanksgiving. It's the way we used to do it. And I had money to go to the grocery store with. I ended up loading up 2 carts because all the stuff that I couldn't afford to buy before, I'm like, oh, I could do it. And by the time I got to the cash register, people might be able to relate to this, unfortunately, but tears, because it was such a relief from something so hard. So when I hear what people are going through today, I can empathize with that, because been there, done that, know what that's like to worry about the ability to feed your family. If I could feed the flipping world, I would. And it's why I did the urban farm here, because 2008, look, at Shearson, I started studying about currencies and currency life cycles in 87. So when 2008 happened, there wasn't even one little doubt in my mind, but that was the end of the system. I mean, I came over in 2002 because the formulas confirmed that was where we were going. So that's when I started becoming an urban farmer, because food is the single biggest issue for people as we go through these reset transitions. And you can see it. You don't need a telescope to see that people are hungry and having trouble feeding their families. And that also is eye-opening. That's why community is so important, because there are a lot of people out there that, there's always a way to afford it, because gold and silver in any form is monetary at its base. It doesn't matter. So there really is probably always a way to afford some silver and some gold. But community, that's why I said that is my biggest mission, is to bring people together in community, because that's where the strength is. And not everybody can afford to go out and do what I've been very fortunate enough to have the ability to do. But I'm also surrounded by a huge community that supports all those efforts. And I've been working on it hard since 2008, hard. And so I have met one other person that's more ready for this than I am, which was really nice to see. But yeah, I planted out the whole exterior of my property and then encouraged my neighbors. Yeah, You know, if you see a pomegranate, go ahead and pick it. You know, just don't hurt the plant. You know, zucchini, whatever. Because when people are hungry and hopeless, they make choices they would not otherwise make. And it puts those that are in power in jeopardy, because there is a revolution and we're seeing it pop up all around the world. And what are they doing to quelch this? Well, some of it's really awful and violent. And other countries are starting by feeding people. And you might remember the Arab Spring. That happened, you know, what about
2011? Yeah.
Yeah. You know, and how did they stop that? They fed them. They gave them food.
Well, that was the catalyst for it, right?
Pardon?
That was the catalyst for it. They couldn't buy food. Food was getting too expensive.
Exactly. And that's my point. We're seeing this spring up all around the world. That's why it's so critically important for you to get independent. But a lot of people don't know how to do that. And that's why you bring into community, because everybody has some gift, some talent that they possess. Bring it in, share it with the community. That was my big lesson when I was trying to figure out why I was on the planet. It's because we're all here to share the gifts that we've been given. And your gift is not less than my gift, right? So you come together, everybody shares everything, and now you have strength. And now you can say, nope, government, I'm not going to go into your surveillance economy. If we don't do this, we're going to be stuck there. And you might also, I mean, one thing that I'm finding extraordinarily interesting watching is the retail public are saying no to cryptos, right? I mean, they're in a crypto winter. The test of whether or not this is a digital gold that will hold its value, I think we can see that that's just not true. So this has 5,000 years of proof. When you're going into a new system, it's what you need, but not everybody can afford it. But everybody can afford to learn new skills. Everybody can go meet the people that create your food. Give them a day or two of your labor. Learn some skills. I can lay irrigation if I had to. I'm an urban farm. I had to figure that out. Do I want to? No, but I'd be happy to give you food to lay that irrigation. So you see what I'm saying is you have to develop what has value that you can barter. And if you can't afford gold or silver or fully all the food and all that stuff that you need, develop your skill sets. That just takes time. It doesn't cost money. It just takes time. And that's what I'm encouraging everybody to do. But if you can convert into this, let's have a movement. Let's have a revolution. Let it be peaceful. Doesn't have to be anything but peaceful. All you have to do is vote with your wallet and convert into gold and silver. That's easy.
Well, first and foremost, Lynette, thank you for sharing that backstory. I've never actually heard that side of your background before, so I greatly appreciate you, sharing that piece. It's very telling. And yeah, times are tough for the average person, and even the above average person. Even the above average person, like even if you're making six figures, it's 6 figures doesn't get you as far as it used to. So. And I think people are finding out the hard way that gold and silver are money. They could have found it out the easy way a few years back, but that's just human nature, right? So, yeah. Lynette, thank you so much for coming on, as always. Anything else you'd like to talk about before we wrap up?
Wow. I mean, I got to talk about my most important function. So, what my real job is. So, no, I think we're good. There's lots of things that are happening, but it's all indicative of the end of a currency's life cycle. And so we've got a lot of data to go on. The strategy that we execute at Zang International is built in layers. And it takes all of this into account, but community, get it done while you can.
All right. Where can people find you, Lynette? I know you have a YouTube channel too.
Oh, I sure do. On LinkedIn and on YouTube. Where's YouTube? I don't see it up there. I see
We'll have
Facebook.
we'll have your socials linked below, so you don't have to give out the exact link.
Okay.
But yeah,
Yeah, it is Zang International. We just had a name change. I'm really excited about it. It's more reflective of where we're going because we are a global company. And I am, my next show that I'm doing is in Australia, and then I'll be in New Zealand. And it is about, and we'll be handing out lots and lots of dime cards because it is about helping the world. You help the world, you help yourself.
Excellent. Well, thank you so much for your time, Lynette. We'll have the link to Zang International, the website down below, as well as all of your socials. So be sure to check it out, guys. Lynette, always a pleasure. Guys, if you got value out of this podcast, drop us a like and comment, "Go, Lynette, go," in the comments section. I do, in fact, read the comments, and I do reply to the comments. I can't reply to all of them, but I have been replying to a good chunk of them lately. So if you want anything replied by myself, leave a comment, and I will be picking out comments to be read for future episodes too. So if there's any questions you want answered, drop a comment down below. I'll pick it out. Hit that hype button too, that new YouTube feature I mentioned. And thanks for watching, guys. Check me out on Substack as well, capitalcosm.substack.com, and I will catch you all next time. Bye.